Welcome back. As always, I hope you had a great day. To get things started, let's look at how the market performed today. The S&P had a great day, ending up 1.48% and ending above 3,000 points for the first time since March 5th. The Dow was even better, ending up 2.21% as it tries to catch up to the gains of the S&P and the NASDAQ. The NASDAQ ended the day up 0.39% and started off deep in the red as investors are taking profits from tech. Today, the Mortgage Bankers Association reported a sixth straight weekly rise in mortgage applications. Data released Tuesday showed new home sales in April topped estimates. Sales of new U.S. single-family homes increased by 623,000 last month, beating estimates of 490,000, according to Dow Jones. It was the sixth straight week of gains and a 54% recovery since early April. Joel Kahn, an MBA economist, said, quote, "The home purchase market continued its path to recovery as various states reopen, leading to more buyers resuming their home search. Additionally, the purchase loan amount has increased steadily in recent weeks and is now at its highest level since mid-March. Some analysts also believe there is now a flight from urban downtowns, where people have been sheltered in small apartments, to suburban markets, where they can find more space, especially backyards and home offices. Buyers were also helped by near-record low mortgage rates." All sectors performed well today, being led by the recently strong financials, which were up more than 3.2% on average. Industrials and telecommunications, two sectors which were destroyed in the March sell-off, also led the way up. This continues the trend of investors rotating into beaten-down sectors. Paul Christopher, head of global market strategy at Wells Fargo Investment Institute, said that the broadening out of the rally has been important and should help propel stocks. He said, quote, "The market has to figure out there's more than one story to price," he said, noting it would be hard to have a sustained rally without FANG. Looking at Morningstar data, we see the rotation clearly being shown. Small cap value was the winner today, gaining 4.2% on average. Value, core, and small caps all had a great day. The winners in the stock market today were two retail giants, The Gap and Nordstrom. The Gap gained 18.37% today, while Nordstrom gained 16.84%. These gains come after the economy begins to reopen, with more retail stores following. Today, Nordstrom announced that they will be opening Nordstrom and Nordstrom Rack stores. Fellow retail giant Kohl's was up 14.5% today as well. The biggest loser today was Dexcom, which is a company that develops, manufactures, and distributes continuous glucose monitoring systems for diabetes management. Dexcom was down 5.8% today, as investors took profits after a tremendous rally in which it doubled from its March low. The other biggest loser was Fortinet. Fortinet develops and markets cybersecurity products and services, such as firewalls, antivirus, intrusion prevention, and endpoint security. Today, they were down 4.64% as they suffer the same story that Dexcom had. Investors are taking profits after a large rally since March lows. Getting into earnings, we start with Toll Brothers, ticker symbol TOL, which is a luxury home builder based in Pennsylvania. Today, Toll Brothers rallied 9.5% in regular trading hours and an additional 7.5% in after-hours trading due to earnings. Toll Brothers had an EPS of 59 cents, beating estimates by 17 cents, while also beating on revenue estimates by 80 million, coming in with 1.55 billion. Note that this was a decrease of 9.9% year over year, but is not much of a decrease considering the pandemic. Toll Brothers also ended the quarter with a nice balance sheet. They had approximately $2 billion of liquidity, including $741 million of cash and marketable securities, and an additional $1.3 billion available under their $1.9 billion revolving credit facility, which is not mature until November 2024. With no significant debt maturities until February 22, Toll Brothers is looking well set up to take advantage of this opportunity. Next, we have Workday Incorporated, ticker symbol WDAY, which is an American on-demand financial management and human capital management software company. Workday moved up nearly 5.8% after their earnings report, where they missed on EPS but beat on revenue. Non-GAAP EPS missed by only 5 cents, while revenue beat by 20 million, coming in at 1.02 billion, and being a growth of 23.6% year over year. The company also announced partnerships with Microsoft and Salesforce. Workday customers will be able to run Workday Adaptive Planning on the Microsoft Azure cloud, according to a company statement. Workday is also working with Salesforce to develop applications that will help businesses more easily return to work. Next up, we have Hewlett Packard, ticker symbol HPQ, which is a popular information technology company. HP beat on non-GAAP EPS by 7 cents, coming in with 51 cents. Revenue was down 10.7% year over year, coming in at $12.5 billion and missing estimates by 240 million. The company also provided third quarter guidance that is below Wall Street estimates. The market didn't take this news too well and sent shares down more than 5% after hours. Lastly, we have Box Incorporated, ticker symbol Box, which is a cloud content management and file sharing service for businesses. Box beat on both EPS and revenue estimates. EPS came in at 10 cents, beating estimates by 5 cents, while revenue was at 183.56 million, representing growth of 12.6% year over year and beating revenue estimates by 1.48 million. Cash flow from operations grew an outstanding 143% year over year. The market didn't respond much to the news, as it only sent shares up 0.61% during regular trading hours. That is all I have for you today. I appreciate your time. Currently, stock market futures are in the green. Thank you. I'll see you again tomorrow.